Hey guys, welcome back. I hope you're having a really great week so far. Today is election night and we did open this week in SPY with a bounce on the 50-day moving average. And taking it back just a little bit, we did make all-time highs middle of October right here. And ever since then, we've been making lower highs and lower lows. And this week, we bounced on the 50-day moving average. And actually last week, we bounced there as well. So this was Thursday, and then Friday, we swung back up. And then Friday of last week, we closed right here. And then Monday, we had that second bounce on the 50-day moving average. If you were looking at your secondary indicator, it could be either Stupid Willie or RSI. There was a bullish divergence here, and that aligned right with that 50-day moving average. We bounced on Monday, didn't get too far up, but today, election day, we gapped up, and we pushed up back above the 35 EMA, which was previous resistance. And we took it all the way to the top of the implied move for today. So 1 hour 200 moving average was right there. And also we got into this gap from last week when we gapped down on Thursday. That is the level where we came back into today. So key takeaway here for sure today is that bounce on the 50-day moving average with that bullish divergence. And we took it all the way to our first true resistance, which was the 1 hour 200 moving average and the top of the implied move on the day. And same thing over here in SPX. We opened the week on Monday with a move down to the 50-day moving average, which is where we bounced last week. This was Thursday. This was the up gap on Friday. And then Monday, we closed that gap with that second bounce on the 50-day moving average. We did see the bullish divergence in Stupid Willie. That also shows up in RSI. I'm not going to switch to it now, but RSI shows that same bullish divergence, and that goes right with that 50-day moving average. So today we gapped up, took it back above the 35 EMA, which was previous resistance right here, ever since we dropped down under here. And then we took it all the way up to the top of the implied move, just a little bit underneath the top of the implied move on the day. And that 1 hour 200 moving average was there as well. We got into this down gap just a little bit today right here. When we first got near that down gap today, we did see a little bit of a pushback, but then power hour, we got into it just underneath that 1 hour 200 moving average, and we didn't see a whole lot of resistance here. And taking a look where futures are right now, up 1.3%, it looks like we could gap over this down gap completely with an up gap. Let's see where that takes us. Futures are up 1.3%, and that would take us to, all right, 1.3 is right here. So that would take us just underneath all-time highs. And remember, I did have the top of the implied move for the week marked as well, and that was 58.80. So this futures reading right here takes us just underneath all-time highs. And that would be a really impressive move and a pretty solid bounce off of that 50-day moving average if we did open up there. All right, so then taking it over to QQQ, what happened over here this week? We opened Monday right here underneath the 35 EMA. Today we gapped up, got back above that 35 EMA, which was previous resistance. Saw a little pushback at the 1 hour 200 moving average, but kept pushing up, and then we saw resistance at the 30-minute 200 moving average. Right here, we do have a island top gap, which is this up gap right here and this down gap right here, and we closed just underneath that gap. And here again, we have futures up 1.3%, and that would take us from where we closed. That would give us another gap over the island, and that would take us right here to just under 500, which was a previous resistance level. You could see right here, we saw it 3 times as a resistance level, and futures where they are right now would take us right up to that level. And where did I have the top of the week? Top of the week I have at 505. That would give a little room to run to that level. And also having three gaps, the up gap, the down gap, and another up gap, that would make this a really big target for the next few trading sessions. This would definitely become a battle zone. And this is my opinion just from what I've observed in the past. If we do get above that with all those gaps, then I would look down. I would be targeting into here in the next few days. So then IWM, we had a huge up day here today, and we did start the week with a bounce on that 50-day moving average. So IWM has been finding that 50-day moving average as support for a little while now. Right here we saw bounce, 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 and then we opened the week right here and then just took off. So Monday, we took it all the way to the top of the implied move and then dropped back down to the 1 hour 200 moving average. Today, election day, we dropped down to the 50-day moving average and then took off. It was a huge day today. From top to bottom, it was 2.2%. So huge up day for IWM. We did blow past the top of the implied move for today, and we did get back above the 1 hour 200 moving average, the 35 EMA, and the 30-minute 200 moving average. So if this 35 EMA pulls back through right here, we will have returned into a bullish setup here. So right now it's not quite there yet, but we definitely can see that tomorrow. The momentum here on the 30-minute and the 1 hour 200 moving average is still pointing down, but with an event such as the election, that could be big enough to turn that pretty quickly. We did also close right at previous resistance. And then DIA, we opened Monday down, and we got underneath the 50-day moving average and into this up gap right here. This is the up gap from FOMC when we had the rate cut, and we saw that as support last week, Thursday and Friday, and then on Monday, we got into that gap and bounced right back up above the 50-day moving average today. So 50-day moving average across the board has been a support, and also in the Dow, that FOMC rate cut gap, you could see before right here, it was a pretty strong support, and when we dipped into it, we also found some buying there. So really interesting start to the week. Of course, we have this election too today, which is going to add some added volatility tomorrow. And let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love how I break it down every night, then please make sure to give this video a like, and don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. Alright, so the trading ranges for tomorrow are huge. You can see right here is the 30-day average volatility, and then the implied move for the next 2 days is much wider than that. So the implied move for tomorrow post-election is between 567 and 586, and that is from options. The 30-day average volatility is even wider than that. Sorry, I don't know what I was saying there. The 30-day average volatility is right here. So we're not going to use these numbers here, but the implied move for Thursday's contract is much wider. It's 564 to 589. So wide trading range for tomorrow from options, and $3 wider on the next day's contract. And to the upside, we're going to look at this today with where futures are right now. So they are up 1.54%, and that takes us above this down gap. So that is a reversal signal if we do open up at that level. So 1.54% actually takes us right to the top of the implied move. So that's at 586, and that is also just right at all-time highs. So that would be a huge gap up, about $9. And that would also take us to the top of the trading range. So 586 is the top of the implied move. 586.12 is all-time highs. And then 589 is the top of the implied move on Thursday's contract. So if we do find ourselves up here at open in a few hours, then 589 might be a good strike to maybe cap the day on. That is where I'm going to be looking. And then to the downside of that, we have this downtrend that we've been seeing all month, well, about 2 weeks now, and downtrend off of all-time highs. And the last time we hit that, we really got smacked down. So this level right here could act as a support if we open above that. And then underneath that, we do have this down gap. And whenever there's a down gap followed by an up gap, we do oftentimes come back in and fill some of that. It does become a battle zone. So if we open up and make new all-time highs, I would think that we come back down and fill some of this gap down here. And within that gap, we have the 30-minute 200 moving average, the 1 hour 200 moving average. I'm on the 1 hour time frame, I didn't realize. I'm going to drop it down to the 30-minute. So we have that 30-minute 200 moving average right here, the 1 hour, which is just right above where we closed the day before the election results started rolling in. And then we do have that 35 EMA as well. Always good to know where your 35 EMA is. It's such a critical level in every day, and it is pointing up today. Underneath all of that, we do have the 50-day moving average. We have been finding support there last Thursday, this Monday, and that is towards the bottom of the trading range with 567 as the bottom of the implied move and 564 as the bottom of the implied move on Thursday's contract. And then this gap right here is the up gap from the FOMC rate cut. So clearly you can see this is not an ordinary trading range. It is huge. There's a lot going on in it, and it does look like we're going to be opening near the top of that. Remember what happens when we gap over the implied move. If we do that at open, it is very possible that we squeeze up from there. That is something that I've definitely pointed out over the past few months, and each time it seems to happen. If we get above the implied move, that forces shorts to cover, and it just pushes us higher. But if we open within the implied move, then these strikes would be good strikes to look for to maybe cap the day on, but be careful. And SPX, the implied move tomorrow over here is between, hold on, give me a second, let me put the numbers in here. I did not put in the values. There we go. So, all right, so here, super similar situation. We are up 0.55% in futures. I don't normally look at futures while doing this. I do sometimes, but this is an exception because of the election. So 0.55% literally takes us to the top of the implied move. So let's just theoretically put opening up here near the top of the implied move. So then to the upside, directly above that, we have all-time highs. 58.75 is the top of the implied move, and 58.78 is what I have for all-time highs. 5,900 is the top of the implied move on Thursday's contract, and 58.80 is the value that I had from the beginning of the week. So before we started the week, options said 58.80 as the top for the week. So if we get anywhere near that level, I will definitely be selling bear call spreads there. And then to the downside, let me extend this right here because that is a past resistance that could definitely be a support. So if we do drop down tomorrow, this level right here, something to look for. Underneath that, we have the 30-minute 200 moving average, the 1 hour 200 moving average, and this down gap. Now, if we open with an up gap right here, this is going to be a huge level of interest. I heard a really cool saying today, gaps are traps, and that is doubly true when it's an island top or bottom gap, when they overlap. So gaps are traps. That would make the downside the level of interest in in tomorrow's trading range. And then underneath that, 35 EMA. Always know where that is because it is a very important level. Cutting through the trading range for the next 2 days, definitely a level that could hold us up if we drop. And then underneath that, the bottom of the implied move is 56.90. I skipped the 50-day moving average. That's a huge level. That's right here. And then 56.60 is the bottom of the implied move on Thursday's contract, and that is in this gap from the FOMC rate cut gap. So we have the past, what day did we have that rate cut? That was September 19th. So September, October, November. Our trading range for tomorrow is massive, going back to September and October and coming all the way up to all-time highs. So tomorrow's trading range is no joke. We could definitely see some volatility, and things definitely look like they could get a little squeezy. You could see that in futures right here. And but 58.80 still looking like a really good target, in my opinion, for tomorrow, to call it as top on the day. All right, and then QQQ, the implied move over here tomorrow is between 483 and 501. That is from options. 30-day average volatility, let's just forget about that actually, because that is down here and less wide than options. So we're just sticking with the options range, and 480 to 504 on Thursday's contract. And then the top of the week I had at 505, so just short of that within the next 2 days, but maybe Friday 505 is possible. And then to the upside, so let's see where we would open if we open with where futures are, 1.54%. That would take us to right here, so just underneath the top of the implied move at 501, and pretty much right where we have been seeing resistance. So a little bit above where we've seen resistance. Well, maybe not above. Let's call resistance 500. So 501 is the top of the implied move for tomorrow. On Thursday's contract, 504, and that actually would take us to all-time highs. So we made new all-time highs in, let me go back here, that was in mid-July, and that level is just above the implied move for the next 2 days, if that is any indication of how big tomorrow's trading range is. It doesn't look huge when you look at it from this way, but this is an $11 move on Thursday's contract. That is massive. So then to the downside, we have this resistance just under 500, let's say 499. And then we have this wild gap right here, up gap here, down gap here. That in itself is a battle zone, but if we open with a gap up as well, that is going to add a lot of highs into this level. So top of that gap is 597 to 592. And then within that gap, we have the 30-minute 200 moving average. Just underneath it, the 1 hour 200 moving average. Bottom of the implied move, 483. 50-day moving average at the bottom of the implied move, and 480 at the bottom of the implied move for Thursday. 4 hour 200 moving average is creeping in underneath that. These two are still pointing up, so if we do drop, I would think this would catch us or at least slow us down. And tomorrow, if we do open up here, I would definitely be targeting that 505 strike. All right, and last thing I want to point out right here, we did close bearish today with that 35 EMA underneath the 30-minute 200 moving average. This is a unique exception because of election, but we did technically close bearish today, so that could pull us down. And then IWM, huge implied move over here today as well. You can just see how massive it is compared to the 30-day average volatility. and the implied move for tomorrow is between 217 and 231. That is from options. The 30-day average volatility is right here, so much more narrow, and the implied move on Thursday's contract 216 to 233. And I don't have IWM over here for futures. I am going to add that one of these days, but I did just pull it up on my phone and it's up 3.13%. So that is massive. That would take us above a few resistances here. 3.13 is right here. That would take us above the implied move for tomorrow, which is 231, and it would take us above the next two resistance levels. So know that if we do open near that, it is going to cause a squeeze upward. Gapping over the implied move almost always results in a push higher. So it may not be the kind of day where you want to cap off top or call top unless we open within the implied move. So 231, top of the implied move for tomorrow, 233, top of the implied move on Thursday's contract, and 229 was the top of the week. And then let's zoom out and see where these dashed lines take us. So this right here, 228, I believe that is where we closed that big long time gap right here. So remember back in July, we had resistance at this second one right here, and we popped up, closed this gap that went back to 2021, and then we dropped. So that is a huge level to watch out for at 229. That also lines up with the week top right there. And then underneath that, we have resistance, previous resistance right here, 227. That could be a support if we drop. And then another resistance right here at 225, which also could be a support. All right, and then let me get a little closer in here again. Underneath that, we have the 30-minute 200 moving average, the 1 hour 200 moving average, and the 50-day moving average. So if we do drop, we do have a lot of levels to look for support. We do have bullish momentum here, and clearly futures are rallying heavily. So if we open up here, we're going to squeeze higher, and this is just going to push us up even more. So be careful tomorrow. I would not go short until the market actually realizes that a Trump win is probably more bearish than bullish, but that's not going to happen tomorrow. Wow, that is just a huge trading range for tomorrow. Let me see if I see anything else. Nope. And then moving over to DIA. So Dow Jones, this is such an interesting chart for me. We have been seeing lower lows and lower highs here for, I need to measure out for how long. So right here, we made new all-time highs. So about 3 weeks now, we've been seeing lower lows, lower highs, and then we finally found some support here on the 50-day moving average. And futures for the Dow are up right now 2%. I have that on my phone. I don't have that off to the right here. So 2% would take us literally to the top of the implied move for the entire week. So options at the very beginning of the week projected 432 as the top of the week, and where futures are right this minute is at that top of the implied move. So we did see the last time we saw that level right here, we got above it briefly and then we're not able to hold that level. So 430 is the top of the implied move. It's where we have resistance, and then above that 433.09, that is all-time highs. That is just outside of that. If we do open up near the top, I would probably be interested in maybe 434 bear call spreads on the week. I actually don't trade DIA all that often, but I feel like that might be a trade that I could take. Underneath us, we do have this down gap. This is the down gap that we had right before we turned bearish right here on this time frame. Gaps are traps. I love that saying. I will definitely be using that. But the bottom of gaps are often supports. So 427, that's a little bit closer to 428. And if we lose that, we do have the 30-minute 200 moving average, the 1 hour 200 moving average, and the 50-day moving average right here. So you can see this 35 EMA traveling downward. It actually bounced right on the 50-day moving average. It's really interesting sometimes when you pull the price out and just look at how the moving averages move. And we did see a bounce right here. And with futures up so high, we will clearly get a follow through on that. So 50-day moving average is max pain if we do drop right now. And underneath that, we do have the FOMC rate cut gap. If I put price back in, you could see that is where we did have buying. So there you have it, guys. All the things you need to know for tomorrow. Have fun, trade safe, make sure you take profits when you're out